Welcome to the Business Sales and Acquisitions Podcast. This show is built around real conversations with people who have either bought or sold a business. In each episode, we go into what really happened, what was harder than expected, and ultimately what that person would do if they had to do it all over again. The goal of this podcast is to provide some insights to people who are either in the market to buy a business or thinking about selling their current one. With that being said, let's get into today's episode. All right. Well, welcome to the Business Sales and Acquisitions Podcast. On today's episode, we have Tim Long, who is owner of Elmark Signs and Graphics in Westchester, PA. In this episode, we have a unique experience here because Tim purchased the business existing and then later on wound up selling it successfully. So we're going to have kind of a two-part episode today where we're going to talk about not only the buy and sell side, but also some system optimization that you had experience with that you saw being very fruitful. So we're going to go through all those details and have a good time.
Sounds great, Steve. Thanks for having me here.
Absolutely. Absolutely. So let's rewind a little bit. Let's go back to before you owned the business, kind of catch everyone up to speed to what you were doing professionally up until that point.
Sure. Yeah. So I started my career accounting graduate out of Villanova, got my MBA, went into banking actually. Got to be a commercial banker for about 13 years at Core States Bank. Left when Core States was acquired by First Union, and got into private equity for 10 years. I worked with two small private equity groups that were both of them were acquiring industrial manufacturing companies. Took me up through 2009, where I lost my job in private equity. We had just gone through the 2008 recession. At that point, you just couldn't find your way to buy any new companies because you didn't know what tomorrow brought, So 2009, lost my job in private equity. No other jobs to be found, obviously, at that point in time. Got to figure out what to do now. My oldest son's starting college, looking at which $50,000 a year college he wants to go to, and I'm trying to figure out how to finance this. So trying to figure out, can I buy a salary here? Mm-hmm. So I started looking, what could still work in a deep recession like 2008. Well, people still want to buy beer, right? And they want to enjoy their case of beer. So maybe a beer distributor. Mm-hmm. I looked at that. I looked at a dry cleaning franchise up in Boston, went up, did a full day with them and looked at everything they had going. Ultimately, I was extremely fortunate to land a job back in commercial banking with PNC Bank. Went there, worked out of the Philadelphia office for 4 years. Around the 2013 timeframe, I kept through the time frame where I worked at PNC, weekends, nights, whatever. I'd get listings of businesses on the internet that were for sale.
The search was still going in the background.
Yeah. Just kind of continued to have a feel for, what's out there, see if there's something that enticed me a little bit. I was able to cash out of one of my private equity investments around that time frame and get a few dollars to kind of rub together to put something together if I could find something. But it was a long search, it was years, and some of it slower than others. I started to realize that sometimes when you go to buy a company, and there was one particular group that would put deals out that were kind of pre-priced, and kind of the first one to come in that agreed to pay a certain dollar for a business and signed their letter of intent that they created for the seller would get the deal.
So this was like a brokerage?
It was a brokerage,
okay.
Yes. Yeah, and that was their deal, was they would go out, pre-price the deal through an SBA lender and put it out there for a dollar amount. And of course, you could come in with something less.
Sure.
No guarantee that you would get it, but the first one that would – and they would price them, on the lower end, right? So some of these deals were strong. And so the point of that is I realized that you had to be the first one out there to look at these businesses. You had to be aggressive. The looking only on weekends and occasionally every 2 weeks or whatever really wasn't going to get it done. So I needed to kind of get more aggressive. So I did. And any rate, so the sign business that I am buying, Elmark, was on the market for over a year. I looked at it one time a year prior, and it was called Elmark Graphics at the time, right? And I don't have a graphics background. I'm a finance guy, right? And I didn't know that I could actually run a graphics company, so I just nah. But then looked at it a year again later. The numbers were still pretty strong, and this time I thought, well, let's talk to the owner. So I went out and met with the owner and understood at that point that it was light manufacturing, which is something that I had some expertise in from my private equity days. And so I felt like it was worth taking a chance. I had looked at other businesses. There was a lawn and garden sale and repair shop, that I looked at. And it was one of the ones that sold really quick before I had a chance. I had looked at a home health care entity that was up near Doylestown. My wife worked at Doylestown Hospital, so I had a pretty good connection with that and could get referrals into it. But I had it all priced out. I had financing in place with the SBA, with a lender, but I backed out because I was concerned that I would be the one going into somebody's home on a Sunday when somebody called out, and and I don't have any healthcare background either.
Sure.
So, although it's just home help care, if you will. So so at any rate, the sign company Elmark was on the market again, and understanding that it was a light manufacturing company, and I didn't know much about signs or graphics, but I can learn things, and it seemed to have in place a pretty good track record. The company had been around for over 20 years, and it was pretty well known in the community there. And just going through the due diligence, one of the things that I had in mind when I was trying to buy a company, and one of my themes was, I'm now spending my own money on this. In private equity, I'm putting other people's money to work. And, I made other people a lot of money over my private equity time. So I was hoping to, do so for myself here. But now I'm spending my own money, right? So if something goes wrong, like this is cash out the door, right? And it's not coming back. So I always told myself I'd rather lose 3 good deals than do 1 bad one, right? So in terms of pricing a deal or putting it together. And of course, I had, with my private equity background, I had created a model to price a deal. We'd do 3 different scenarios, kind of a regular, a moderate growth, and a high growth scenario. And price them out and make sure that my return would be somewhere in the 20 to 25% range on my cash going into a deal. Obviously, the key to buying a business is to be able to leverage it up a little bit, and get a return on that leverage, right? You're using somebody else's money to help create some wealth for yourself over time. And so that's what I would do. I would create that. And when I went to buy Elmark, that's the way that I went about pricing it. Was, I put a number out, and if they said no, it's fine, we're going to walk away and, be friends or whatever. But they said yes. So I was able to get it together and get the financing together. So the way that the financing all came together, it was my cash to a degree. I went out, sort of an interesting thing. I already had a home equity line of credit on my home. I got a second home equity line of credit. Actually, when I started looking harder for businesses, I went and got the second home equity line of credit on my house ahead of time, so that I could put kind of the full value of I already paid off my house, my home.
Gotcha.
So I had some value in it. And the first home equity line I had was at a low rate, and if I didn't keep that, it would have went away. So I got a second one on top of it. Anyway, so I used some of that, went out to a number of banks. I was at PNC at the time. I didn't go to PNC because I was working there, right? Yeah. So, but number of banks. Most banks wanted me to go to SBA route, but I was able to get a loan through Santander. I got a line of credit and a term loan. The seller provided about 10% seller debt. and which is pretty typical, of this kind of transaction. Maybe pieced it together differently than most people would with a home equity line and a term loan and a line of credit. But
Got
you
creative.
do what you have to do, right?
Yeah.
I didn't have to have my wife sign as a personal guarantor. She would have on an SBA loan. The fees weren't quite as high as you'd have on an SBA loan. So I was able to parcel it together like that.
Yeah, quick question just on the search side of things. So it sounds like the way you were evaluating was almost purely numerical. Would you say that that's pretty much how you were evaluating what opportunity you're looking at? Like there was no influence on what you wanted to do. It was more how strong was the business model?
To a degree, yeah. Obviously, I wanted something where I had some knowledge and felt like I could create some value as well. But mostly it was monetary. Yeah, in my private equity days, every business we bought was profitable, right? And so the interesting thing, for some of your listeners here would be good too, is when you buy a profitable company, you can't finance all of it. There's not enough assets there for a bank to grab onto and say, okay, there's enough assets here, so I'm going to give you an asset-based loan, and it'll cover everything that you need for your purchase, right? You got to come up with some equity. You got to have some other means to do it. SBA sometimes can get you a little closer. You can put 10% down or something like that. But, in terms of buying a profitable company, at least you know that the company has a track record of doing well. And this one, I saw 2 years in a row that had done well. So felt like there was a good opportunity there to kind of grow it.
Gotcha. And just curious, what kind of brought you back to checking out the sign industry? Because at first it sounded like it was like, I don't really know about graphics and I'll push it off. Like, what was the change of mindset to say like, no, it's worth exploring and seeing if I could potentially own this?
Yeah, I think it was just kind of taking a second harder look at it, and getting the numbers again for a second year and seeing that they were strong, and then understanding better what they did, just kind of diving a little deeper into, what Elmark Graphics did and realizing it was Elmark Sign, not Elmark Graphics.
Got it.
And we changed the name when I bought it right away. We changed it to Elmark Sign and Graphics.
Logical pivot.
because we're a sign company. It's really important that people understand what we do. And the honest truth is, as a sign company, I didn't want us to be a graphics company. And the roots of the company were graphics. The guy who started it was a graphics guy. I was not. The person before me was not. I was the third owner. But the roots of it were graphics, and we really wanted to do one good sign design for you and you to say yes and buy it. We didn't want to do 5 different designs and have you pick from them because just gets too confusing.
Yeah.
We don't get a sale. It takes too much of everybody's time, and that's not what we do. Some of the design companies that we worked with on office concepts and things like that would come up with a lot of designs, but they asked us sometimes to do more, but I would tell them we just do one.
Yeah.
And if they say yes to the one, that's good. If they want some changes to it, we would take their advice and try to make some changes. So
yeah, that makes sense.
Yeah.
So you identify Elmark, things look good. How did the process go from submitting your LOI through till closing? What did due diligence look like for you? Was there anything that you uncovered that was a surprise? Kind of walk us through that part of the process.
Sure. So we went in, I had an accounting friend to contact a business contact, and he came in and helped me do a lot of the due diligence. The two of us did it. We went in and went through all the books and records and things. We went and, saw the facility. We did an inventory count. We looked at, the information that was around. Didn't meet with any of the employees. They didn't know about the sale.
How did that work? Did you do it after hours, or was it kind of just like, oh, there's this Tim guy's walking through today, guys?
Yeah, I think, we were from the bank or something like that,
Got it.
when we came in there, right? And
Makes sense.
But there was a time where when we were doing the inventory, that was on a weekend, and one of the production guys happened to stop in on the weekend and saw us there, and I assume we raised some eyebrows, but it kind of just went by. So,
yeah.
But yeah, that was that process. Obviously get the insurance in place and the financing, getting all that together. And then obviously going through all the legal documentation. So again, with my private equity background, most purchase agreements come down to 4, 5, 6 items that tend to be contentious,
Okay.
Working capital cap or PEG, some of the different warranties and things that the owner has to give to you. But there's typically 4 to 5 kind of items that have to be negotiated out, right? And you have to kind of get there after you've come to a number, right? So we agree on a number. Now here's where you got to get into the weeds a little bit more and make sure we agree on everything. And to be honest with you, I kind of came from a position of strength, having done a number of deals in the private equity world and having seen these kinds of documents. I can tell you once I bought the company and we had a working capital PEG and I got in there and started looking at the numbers, I'm like, you owe me like $20,000 here, and that didn't go over very well. Yeah. So we ended up changing that to a range and gave me a little bit of money or whatever, but it wasn't that. So, but that's, it's important that people buying a business or people selling a business understand how all that works and what's going to happen when they go ahead and sell the business. And particularly if there's a working capital PEG there, that they have to have that amount at least to get to closing, or they got to pay the buyer some money back because they're short. They've taken cash out. They've collected more receivables. And that's what happened in this case is they collected a lot of the receivables. They pushed before the closing to collect receivables, and they didn't have enough there. So because the inventory really wasn't a question in this case. But that's how PEGs work. And, and as a buyer, when you come in, you want to have some sort of working capital. So when you collect that, you have cash that you can pay your payroll and, kind of get started, right? And then if you have a line of credit, that's helpful too. But that's, one way of making it work. And I know sometimes with acquisitions, they let the seller keep their receivables. And that's when I sold, that was actually part of the process. But that's a whole different ballgame.
Yeah, so, sure. Yeah. Well, it's, at the very least, it's good to know how the system works so that you can best optimize for your situation. I think that's kind of like that silver lining there.
Absolutely, yeah.
Cool.
It's important, yeah.
So negotiation was pretty smooth. Due diligence was smooth.
It was. It was pretty smooth through all that. We got to closing and it's pretty quick. I think it's a long time ago now. It was 2013, but when we did it, I believe it was we closed in 3 or 4 months, so I was able to get the financing together pretty quick. And we got to the closing table and got everything done. Walked in and, when they hand you the key to the door and said, "Oh, this is yours now." That's pretty cool, right?
Yeah, so, absolutely. Yeah. Well, that's a good segue. So, you close in the business, you have the keys. You walk in day one. I mean, I guess just kind of from a high level, what was that transition into ownership like specifically early on?
So it's interesting. We sat down with each employee, both the former owner and myself. She stayed on for a while. It was actually a women-owned business too, which is kind of important, I guess, in this whole description of it too. In that we had a couple customers that were buying from us because we were a women-owned business, and they get some tax credits and credit for doing business with minority businesses, right? So it was no longer a minority business. We did do, one large job with a Westchester-based company that was national. We did signs all over the country for them at one point in time. And eventually we lost them as a customer. We kept them for a while and did that. It was a huge job for us when we did that. And I thought we did a pretty good job. We had weekly meetings with them and went over everything. Anyway, I digress.
So this is where deals can get interesting. What Tim's describing is owner-dependent revenue, when customers are loyal to the previous owner, not the company itself. Now, traditionally, this is based on the relationship that these customers have with the owner, but in this case, it was more of the tax incentive from buying from a woman-owned business. But regardless, it's a transferability risk that can materially change the value of a deal. That's exactly what we watch out for, so it can be addressed before due diligence, let alone closing. So if you're thinking about buying or selling in the next 12 to 24 months, check the link in the show notes.
Stepping in, meeting all the employees, trying to figure out who's who's doing what. There was a Pilates group that did every Friday. They do Pilates together. Women-owned business again, right?
Yeah. Yep.
Which is fine. I had no problem with them doing Pilates. I wasn't going to do Pilates. I'm not a Pilates guy. But it was, look, the person who was there, who was the prior owner, was a good person, right? And she did a nice job with the business, and the employees were very loyal to her, and they obviously saw a new guy come in and saw some changes coming down the road. Probably day 2, I was there, and there was a guy we had working on the production staff, and like, oh, hey, this guy graduated from college back in May, and we should have given him a raise, but because we were selling the company, we didn't. So I think you really ought to give him a raise. So we gave him a raise.
Oh, that's nice.
Right.
A little bit of goodwill.
Yeah. But no, it's tough because everything you model is based on what the numbers are. You don't expect day 2 that you're gonna
Johnny needs
have
a raise.
to do that, right? So
yeah.
So you had to learn. We had a guy who was a general manager. He was a very good sign guy. He did both design and he also did some installation and some production. And but he really focused more on design, and that was kind of his life of love, I think, of the sign business. We had different salespeople that were there, some really long and some not as long, but really long. I mean, there was a couple of people there for 20 some years, as salespeople that dated way back with the company. So, getting started, you had to learn. I had to learn the sign business, man. I had to learn what everybody does, and learn what the machines do. I had to learn, how they work. Had to understand how to do things for myself so that I can get taken advantage by employees,
Sure.
And employees would come in occasionally and say, I need a raise, blah, blah, blah. And if you can't do what they do, you've got to give them a raise. Yeah. So you got nowhere to go. So I had to learn that stuff. I did teach myself computer graphics. Like, I didn't know how to do any of that stuff coming in there, finance guy again, but I learned, I asked the other people that we had designing signs how to do stuff and to teach me, and I learned how to design signs myself. Now, look, I'm not like college trained and the expert, but I could design a sign for you, and I could create what we needed to make a sign. Over time, we shifted. When I first got there, we had one person who was just a salesperson, and she would theoretically bring in jobs and hand them to other people to design. But there was a little bit of a rub because she was getting commission and they weren't getting commission, right? So over time, I changed what we did with commissions. And in fact, I started offering commissions to everybody. Well, not everybody, but most of the people, including my production people, because it was incentive for everybody. And it might be just a small piece of their salary, but it was some incentive. So even a production guy, how much can we do in a month? And if you get to a certain point, a part of your salary is going to be commission. So we did that, and instead of putting salespeople on commissions for their own sales, because they weren't really selling at that point in time, and I have to kind of step back a little bit to tell you that, but we put them on commissions for what the company did as a whole. So everybody was working on commissions for the sales of the company as a whole.
More team-oriented goals.
And nobody had their own individual goals.
Interesting.
Which was really important to what we did. We would have team meetings every week. First thing, like on Monday, we would get in a room together, conference room, and go over all the jobs that we have, what's in production, when's it going to be done. By the 15th of the month, as we got further on into my time there, everybody was like, how many can we get out the door? Because everybody had incentives. We would write the sales number on the kitchen wall every day. Everybody would see where we were at. And to me, as an owner, once I got over covering my fixed costs, everything else was gravy, right? Then I'm making lots of money. Everything else is falling to the bottom line. So I called it my profit sharing with my employees, right? So once we get over that fixed nut, everybody enjoys more money. Everybody gets paid more. And I thought it was really great, and it helped us grow very fast.
That's awesome. Yeah, it's super cool. So owner, and just run me back real quick. How long did the owner stay on with you?
So she was there, if I recall, probably about a month.
Okay, so
sort of
not
off
that
and on,
long.
a little bit more like the first few days. And then
Yeah.
she was going to join her husband's business at that time. So she
Gotcha.
wanted to get out of there too.
And then, so she's with you for a month. And then how long would you say until you started to get your feet under you, started to feel comfortable? And then after that, when did you really start to make these optimizations? When you feel confident enough in having a hold of the business to say, okay, now we can start shaking things up?
So it was a few months, and I relied heavily on the general manager that we had there because he knew a lot of the business, and he was kind of groomed to be that guy. And I started to have some people leave at times. So I'd say, let me step back on your question. So 3 months in, I went to everybody and said, hey, what can we do to grow this business? What's the next best thing? There's a show coming up. Is there a machine we can get? Is there something we can do additionally to what we have that could really help us grow? So we went to this sign show in Philadelphia, and we ended up buying a CNC laser, not a laser, but an engraver and CNC machine. And we were able to do ADA signs with that. Our first job.
And that was only a couple months after you
That was
purchased.
about 3 months after I bought it. Yeah, it was about a $30,000, $40,000 machine.
Sure.
We built a special purpose room for it in our shop. Then we had to learn how to use it, right? And then they came in and they trained us, and so we got some people trained on it. And as I mentioned, our first job with Santander Bank, it was for some ADA signs for their ATMs. And I think we had 300 or 600 signs that we had to do like as quickly as we could. And it was a brand new machine. Didn't know how long it would take to do a sign. This machine would go down and drill the holes for the braille balls, then would come back and insert each one, and it happened to be very wordy signs that they created for these ATM machines. So there was a lot of braille that needed to go on them. And so, we had to figure out how long it would take to make a sign. And as we kind of did a few, we figured out it was, 10 minutes a sign. You could maybe do, 12 at a time. But, you have to do 300 or 600, and that's a lot, So, I found myself staying there late at night and doing something. And you had to learn. You had to learn how to use a machine, You had to learn how to make it all work. But that job, probably played for the machine, which was like our first job. And so after that, it was all gravy, and we got into the ADA space and did a lot of ADA signs over our time there.
That's awesome. So good investment. That's what
it was a
we'll
very
take
good
away
investment.
from that.
Yeah. So, but again, tried not to change too much till it needed to be changed. Eventually, we had some people that would leave over time. It wasn't like a influx, but every 3-6 months, whatever, someone would stop in my office, always on a Friday afternoon, say, "Hey, by the way, I'm leaving."
Yeah.
And it was fine. We were able to find other people to replace them. We actually, if you ever heard, get the right people on the bus, we found some really good people. One of the real steps for the business was hiring a 35-year sign guy who was the brother-in-law of a friend of mine. And he had his own sign business. He struggled a little bit with it. And he actually did a really big sign for us out in the Horsham area near my home. And then after that, I said, how about you come join us, if this thing that you're doing isn't working so well. And he decided to come over. So he was a really great find for us. Got us into doing things that we hadn't done before. We rented another shop because we were kind of maxed out in our own shop just for like metal equipment, to bend metal, to make channel letters, which are like individual letters that might go on a storefront, like the A for Acme or things like that. Big illuminated signs. We started doing these in-house. In the past, they'd always outsourced them. So now we were more competitive, right? We could do more kinds of signs. We could do bigger signs, illuminated signs. He had a lot of knowledge about getting permits. All these signs have to be permitted, and you have to have good drawings. He could tell us how to do the drawings for him, and so that helped us grow tremendously. We ended up getting a bucket truck, and before that we just had a pickup truck. With an install guy every day. So we got into bigger and better signs.
So I'm going to take a guess and say that when you were initially buying the business, buying the CNC machine or the bucket truck wasn't necessarily in the exact plan, but what was your thought process on when you bought it? Like, did you have visions to grow as large as possible? Did you kind of want to optimize and make it lean? And then it just, the growth happened naturally? Like, kind of take us through the headspace from when you purchased and what you were looking to do and then what actually happened.
Yeah, sure. So, one of my initial thoughts was trying to do a hub and spoke here, right?
Mm-hmm.
So you got your one shop that you manufacture all the signs. You have some other sales offices, around the area, and that way you can kind of cover more territory.
Mm-hmm.
You can grow. It became obvious that was too difficult to manage people if you weren't there on a daily basis. So, again, for people looking to buy their business, you need to be there on a daily basis.
Sure.
It's super important, and you've got to be committed to what you're doing, or it's going to fall apart on you pretty quick. So not always, but it can, obviously. So I wasn't comfortable after a while, trying to do the hub and spoke. So most of the things that we did were sort of organic, and it's a funny thing. Once you own a business, the opportunities, if you let them, will slap you in the face, right? And so to me, like buying that first CNC machine is, what is it that we have to spend and what kind of return do we think we can get out of it, right?
Mm-hmm.
And so, winning that first job was just salvation.
Sure.
We were looking at doing all kinds of ADA signs. We started designing our own, and we had like our own designs we could put on our website and things like that. And other things that kind of slap you in the face. When I bought the company, they had just redesigned their website. So it looked pretty good. They'd done a nice job with it. But they didn't really do any SEO. So to me, it was new. I had never really done SEO myself or had hired anybody to do it. We hired a local Westchester company to do it for us. There was a guy that was in a networking group that we were a part of. And that didn't work out so great. Like, we really weren't getting any traction from that. So I went to look for another one. And this time, because the guy that we hired, he didn't do any SEO himself. He was just a sales guy, but he had some young people kind of working with him that were doing it. It just didn't seem like we were getting anywhere. So found another SEO company. I'll give them a shout out because they were tremendous for us. Boom Visibility. And they did just a wonderful job for us. We became to the point where we really didn't have to go out and sell. People would find us. A great story. I went to Villanova, grad and undergrad. My wife went there, grad and undergrad. My sister went there. My cousins went there. Call up, get the right person in maintenance that handles all the signs, and get nowhere, right? As an alum, no interest. Then they have a problem with their sign company one day. They find us on the internet, call us up, and all of a sudden we're doing all the signs for Villanova. We're doing, big letters on the athletic wall out in the football stadium for Andy Talley's, athletic center. And we're doing a precast concrete sign for the law school because someone donated $25 million. And we were doing all this because they found us. It wasn't because of my call, my outreach to them. It was because they found us on the internet. And then, of course, we kind of threw some of that in to solidify the relationship. But it was a great relationship for us. So, and that happened any number of times where people would find us on the internet. We would do a tremendous job for them. We became their sign company. And it just kept growing the relationship.
Yeah, before we started the episode, you were mentioning the Santander deal with the ADA. That was through SEO as well.
That was through SEO. It found us on the internet. So that we did ADA signs, and and one of the keys, I'll put this out there for everybody, was it was interesting when we started with this SEO company. They tried to do it by, I think it was by location, and it needed to be by location, but it also needed to be by sign type. So channel letters or ADA, like you had to have that.
That was more important.
That was the way to find us, because people would, if you need a sign, right? What's the first thing you do? You go to Google and you're going to say, I need an ADA sign, or I need a channel letter sign, and that's how you're going to find us, right? And so as long as we pop up at or near the top, we're going to get a shot. Right?
Yep.
So, and that's how you find us.
Very cool. Okay, so it seems like you definitely had visions to grow the business in one way or another. Originally, it was the hub and spoke. That wound up not being the path, but then that makes you stumble into the CNC and then the SEO, and then all of a sudden now you have some pretty significant growth because you did have good growth over your ownership. Correct?
Yeah, we grew 75% over the time that I was there, 4.5 years.
That's
so,
awesome.
And in the last year, that I was there, we were setting records every month. We were just growing tremendously, and it just built upon itself. We took care of our customers. We stood behind the signs that we sold. We made sure they were happy. We made terrific signs, and made sure the quality was there, and we did a good job. And I'm sure not every customer would agree with that, but 95 or 98% of the customers would agree that we got a great sign from Elmark. So, and we didn't make them all in-house. We would outsource some.
Sure.
We did tremendous carved signs. Carved signs are made from urethane. They're not actually carved out of wood. But there was a gentleman who has another sign company in the area that would make these for us. Automotive paint finish, high gloss, sometimes gold leaf lettering.
Wow.
Just brilliant in
Beautiful
the sunlight.
signs,
Or gorgeous signs, and they were a tremendous help for us because I didn't have any labor costs in those, right? Other than going out and installing the sign. We had to pick it up from his place, but he would design these things. Or he would design them. We would design them. He would create them for us, and we would put them out there. So,
but like we were saying, it's your name on the invoice. The SEO
name
paid for itself.
It's my sign. You drive by, that's a sign we put up. Yes, exactly.
That's fun.
Yeah.
Very cool. So, looking back, how would you evaluate your role in the buying process? Like, what do you think you definitely nailed? What do you think you would give some critique for your younger self looking back?
I think I did it as well as I could have. Honestly, I don't have a lot of critique about the way that I went about it. The letter of intent that we put together was strong. The price was fair on both sides, I think. The financing we put together was good. I guess it would have been nice to come in with a little more sign experience, but I learned it quick, and you figure it out over time, and you figure out where the weak spots are, where the bottlenecks are. How you can get more out. One of the things that we did was put in this enterprise-wide system. When we started to grow, we needed to move quicker, and we would create a paper estimate. We would send that out. We'd type it up. We'd send it out. The customer would say yes. We'd type up a work order, get it to the production guys, and they'd bring it up, and then the salesperson type up an invoice, give it to the office manager who would put it into QuickBooks and send it out. And so it was too much. So we found a sign-based enterprise system called Cyrious, and we put that in place. It took, it was painful a little bit to get everybody to learn this new system, but we were able to put all the materials into the system. We had pricing. We had to keep up with the pricing as prices changed.
Sure.
But, you could design a sign in there with how much material you needed of various types, and piece together the sign, send out your quote. Once it gets approved, you could create a work order directly from there. And then the system would actually send out the invoice through QuickBooks. There was an interface through QuickBooks that would send it out. And so we didn't have to touch things so many times, and it was quicker. And if you did the same sign a second time, it was already in the system.
One button.
And that was honestly one of the, again, important thing for future business buyers. When I bought the company, they didn't have servers. They had individual computers, and there was one main computer to kind of save things, but we didn't have a server. So when we tried to do this Cyrious system, we had to get a real live server and get some technical guys to get us set up and get us going, which was really important, I think, for the company, just to have everything saved and backed up and not get destroyed. We had one salesperson who was allowed before my time to use her own Apple computer, and then when she took her computer, I'm like, can you send us all the designs you had? And there's something happened to all the files. We couldn't get them, and so we lost a bunch of files, which was, at times critical to have those things, right?
Yeah,
so we
absolutely.
had to make sure we were covered, and so that was a big step, to have this Cyrious system where we could kind of speed things up and do more sales, right?
Yeah.
And so, I mentioned how much we grew, 75% over 4.5 years. I had 10 people when I started. I had 10 people when I sold. That's how much more efficient we were. We could do that much more. And we were doing bigger and better signs, and some of that helped too, but some of it was just being more efficient with what we did.
Yeah. Absolutely. So any last piece of advice you would give for a business buyer if, they're, from the evaluation to picking what business to what to look for in terms of enhancements and optimizations?
Well, I think have an open mind, right, to what can happen, right? And it's tough to quantify this stuff as you put out a purchase offer, right?
Sure.
But you have to understand that once you're in there and you kind of see things and you learn, and you have to be involved, of course. You got to be very involved with what you're doing. You can find ways to improve things, and you can make the company grow, and you get the right people. That was really important. Over my ownership time, they're all 10 people that I started with left. And again, it wasn't one at a time. It was one this year, one next year, one the year after that. And I got my own people in. The 35-year sign guy was tremendous. Got some other really good people in there. I think we improved, most of the positions. Obviously, I lost the 2 20-year salespeople, which was a little difficult. But, one of the things I did with that was I looked for people. And again, we came out of that 2008 recession, and people had lost their jobs, particularly, in marketing and design. And so like when we needed some design people, I looked for people that had been out of work for a while. Those people were hungry to get a salary again,
Absolutely.
And they generally tend to be really good employees. So, so finding good employees, finding people that, can be on your team. If you ever watch that show, The Profit with Marcus Lemonis, right? He go into those businesses, and there was always like the one or two people that were just absolutely dedicated for God knows what reason to these owners of these businesses. I didn't have any of that, when I started there. I had to build that with employees and get my own people in there. But I think it's really important to have it. And I think, you have to get everybody rowing in the same direction, right? You get the right people on the bus, and you get everybody rowing in the right direction. So bonuses, incentive, align your goals with those of the company, that everybody wants to see the sales grow, make this company do well. It's so important, in my opinion. The 35-year guy, I actually gave what was called phantom equity to him, which is he didn't have any stock, but if I ever sold, he got a check. He got a check when I sold.
Yeah.
So, there was incentive all the way around to make people do well and help the company grow. And it worked. We grew a lot. So.
Yeah. So be flexible and have a central vision for what you're looking to do, and find the people who see that vision, who also want to be a part of it, and put them in place and get them.
And have an open mind. Have an open mind to what you can do, and get into other products. The ADA signs were tremendous for us over the years. Find the suppliers that can help you the most, and stick with them. And make sure you pay them on time. We never had any payables on our books because I always paid everybody right on time. Like,
very nice.
always never wanted to be beholden to somebody. So I think that's important too, like to have that credibility with people and the community, everybody else, right? Because some of these people are in the community that you're buying from, your suppliers, and if you're not keeping up and keeping them paid, like it's gonna be black marks on you. So you got to make sure you do that.
You can be profit driven, but you have to make sure to pay your people.
Cover both sides.
Yep, makes a ton of sense.
Yep.
Very cool. So you owned Elmark for 4.5 years, about?
That's correct.
Okay. So let's fast forward to the sell side and just to kind of bring everybody home, what was your day-to-day role in the business, specifically towards the end when you were, we'll say like the last year to 6 months, like what was your day-to-day and what did that look like?
So I was chief cook and bottle washer. Seriously, I did a little of everything. I was the primary salesperson. So if somebody said, hey, like Villanova, we want some signs, I'm the guy to get in my car, drive out there, meet with these people, kind of go over what they need. Really important with signs to get measurements and match vinyl colors, and colors are really important in the sign business. You got to get the Pantones correct for everybody, right? It's really important. So I would do a lot of the sales process. Okay. I'm obviously, managing the website and things like that. We had a bookkeeper that would do the invoicing and the calling of customers to get collections and things like that. But she would then send me the numbers. I always kept, I just, again, with my private equity background, I kept a rolling 12-quarter EBITDA for the business every month, so I could see if we were growing or not. Every month, are we doing better than the last 12 months or not? So that was just kind of where I was at with that stuff. But I also, got involved, I can remember like a cold day around Christmas going out with my 35-year guy to put a bunch of letters up on a wall outside in 38-degree weather in Westchester there. And you do what you got to do, right? You go out, you participate. I went to a painting class at one time, like spray painting, automotive kind of painting, to learn how to do that kind of stuff. You just had to know. We did a lot of vehicle graphics, truck graphics. So, occasionally we'd have people leave, have to get new people in. There was a guy up in the Warrington area that was willing to train our guys because we were kind of in different markets. So, like $1,000 a day for a person, we'd go up. I went to every one of those.
That's cool.
To learn myself how to put vinyl on a vehicle. And people talk about doing wraps and things like that. We didn't do very many wraps. We actually did one wrap. It was sort of an interesting story for Jim Sapala Kia, right? And it was like a donation card that they had. Okay. We had a guy that had gone to classes and learned how to do wraps. So we agreed to do this one. Had the thing done. It was great. We took it outside, parked it out in the lot. There was stop signs. And, of course, us being a sign company, this wasn't a great thing. But there were stop signs with the post in a like a Home Depot bucket, it was cement, right? That night it was a really windy night. The stop sign get blown over, smacked this car. So they had to fix the car. Insurance covered the damage and stuff, of course, but then we had to kind of fix the wrap and stuff. So we didn't do a lot of wraps. We would do vehicle graphics, and a lot of times that's all that was necessary. Wraps are more of a exotic kind of a thing, in that world, to do the whole vehicle. So anyway, we did a lot of those. That wasn't a great product for us in my own estimation, just because of the costs and what you could get for them. It was a very labor intensive product for us. So that was something. Doing like a big box truck though, that could be very profitable for us. Yeah. Here another great story. We had a furniture customer that had a big box truck, and it was a February install, and they dropped the truck off to us, and that night there's like a snowstorm, and so we're trying to get this truck into our garage. We had a 12-foot door. Most box trucks don't go over 12 feet. This one was like 12.2.
Of course it was.
And there was no way to get in our garage. So So we worked out a deal with one of our automotive dealers in the area to take it over. They let us use
cool.
a bay,
Just
but they wanted us out of there quickly.
Of
Of
course.
course it's snowing, and I'm over there with one of my guys, the two of us trying to get these graphics on this truck, and they're like,
you did the job over there
Yeah,
too.
like,
Oh wow!
when are you going to get this out of our garage? And like, well, as soon as we're done here. But, of course, my employee wanted to go home. It's snowing. He'd like to go home, shovel his driveway, So that was interesting.
Gotcha. Well, I mean, things obviously were going well. What was like the instance that you had that first thought of thinking about selling?
So, one of the challenges, of course, of owning any business is the people, right?
Mm-hmm.
And you get your own team, and we talked about the Marcus Lemonis thing and having your guys or whatever. But you never have all your guys. You have people, and as things started to improve, in 2013, of course, people were happy to have a job, and but salary started to climb over the years. People changed, and it became more difficult to hire people. We needed skilled people with graphics backgrounds that could, make sure everything was straight and the right colors and all that. And so, we came to the summer of 2017, and I actually tried to go on a week of vacation. And it's difficult as a business owner to break away, right? Because, you're pretty key to what's going on with everything going on. And your phone's always ringing. You're always getting text messages.
For sure.
And you want to make sure things happen while you're gone, which is a challenge too, right? So, but that week I had to fire 2 of our production team for various reasons. And and that was the point where I said, I think it's time to kind of go ahead, rebuild the staff here, and then put this on the market. So that was kind of one of the influences of doing it. Plus, I sort of had in my mind of, where I came in at and where I'd think about getting out. And I did talk to a broker, much like yourself, and, figured out, how much can we get here? And the math was pretty much, this is what an SBA deal is going to look like. So this is what you're going to get for the business, right?
Gotcha.
This is how this is how much somebody could borrow, and they'd put this much equity in. And so this is really where it's going to be. You're not going to get, for a business like this, you're not going to get a synergistic buyer, that owns other sign companies or something like that. That's probably not going to happen. It's probably going to be an individual like yourself that wanted to buy and have their own business. So we sort of understood what the number would be, but we had grown. We had added a lot of EBITDA. A lot of times businesses are priced based on EBITDA. Smaller businesses like this, it's at the lower end of those multiple ranges, But yeah, we kind of knew where it would go. And so, for me, again, being a private equity guy and doing, as I mentioned earlier, the 12-month rolling EBITDA, I kind of had all the stuff ready to go,
Gotcha.
So I had all the due diligence that we could fill a data room with, hired a broker who was willing to put it on the market for us. And, we sent it out to a number of people that were on his list that he had, and then I proved the people that could get the book, and we went from there. One of the first people to look at it actually ended up putting in an offer, and I accepted the offer, and it was pretty close to my asking price, or the asking price that they put on it.
Sure.
And that's where we kind of went with that.
Hey guys, just a quick pause from the show. If you're listening to this episode and you're thinking, man, there's a lot more that goes into buying or selling a business than you initially realized, you're not wrong. But that's exactly what we help with here at the Turn Business Advisors. So whether you're exploring buying a business, considering a sale, or just want some guidance before making a decision, feel free to visit theturnbusinessadvisors.com to see if we can help. Interesting. So it seems like you kind of had the end in mind when you bought the business, but it was what kind of like swayed the boat or tipped the scale was the employee piece. And it's like, well, I'm probably about where I'm at, and now is a good time just on a personal basis.
Yeah, and the other thing that was kind of critical at that point in time too was that our lease was running out.
Okay.
We had gone the 5 year. We're coming up to the 5 years. And had to either renew the lease, which we we're going to do for the office. But we still had that machine shop that was somewhere else, right? And so what do we do now? And we had grown so much, if we're going to grow more, do we need more space, right? So I got into the process of looking to buy a building and actually put 2 offers out on buildings in the area, substantial buildings, maybe 10,000 square foot kind of buildings.
Big building.
And neither one was accepted, maybe thankfully, but, that was the other thing was how we were going to do it. And honestly, what we ended up doing was that the owner of the building we were leasing was going to move a business out of one of the other bays in the building and give it to us. It was right next to our bay.
Gotcha.
So we would have more space, everybody in one place, and just a little easier to manage it. So that was the route we were going, and as we were going out to market, that was all happening. So, so the new owner got the benefit of that.
There you go. So it seems like you made your broker's job a little bit easy on the valuation side, going with the equity background and having all your numbers in check. That was probably pretty simple. And you got a couple offers pretty quickly. So how long were you on the market for? Like to getting to like the actual offer?
It was pretty quick. I'd say in a month, maybe month and a half.
Wow.
It was pretty quick because again, everything was there. It was the numbers were good. We were doing record numbers every month. It was solid. The longer thing to selling the business was for the buyer to get the SBA loan, because that's a sort of a longer process too with the SBA to get things done. A lot of documentation and things that it needed to be covered with that. So, but from my side, everything that was out there, it was all truthful. It was all legitimate. We had grown. We had done a great job. We had a good staff at that point in time. The people that had, left back in June were replaced, and we had some really good people that came in to replace them. So everything was pretty strong.
That's cool. And so getting the buyer that wound up purchasing the business was a pretty simple process, seemingly, with a lot of work backing it up. But what was then the process like of their due diligence? It was super easy, because the books checked out. Was there anything that they brought to the table that was kind of a hiccup that was unplanned just for like the sake of the deal?
The only thing that came up was, his SBA loan, and I think the buyer was a little unschooled on SBA at the time where they put the original offer in.
Gotcha.
And I think they were coming in with a 10% down kind of a deal, and they found out that if they could put 20% down, that they could get a fixed rate rather than a floating rate.
Yeah.
And so I said yes, I'll do that, but you got to go back to my original asking price, and they didn't want to do that. So so they stuck with the lower dollar amount and the floating rate.
Makes sense.
It's a choice they had to make.
Sure. Yeah, it makes sense.
But that was a little bit of a hiccup, and I didn't know what would happen with that if they, somehow back out or continued it. But they kept going forward. There wasn't much with due diligence. Again, everything is what it seemed. I didn't hide anything. It was all out there. My numbers were really solid, and they did whatever due diligence they wanted to do on their own side.
Yeah,
but there was no real questions on anything.
Gotcha.
So.
Was there ever a thought? Because I know you pretty much based it on like what the SBA would approve it from a number basis. Did you ever think about potentially carrying a note and doing some seller finance to be able to kind of float the price high, or was it more I want to get this transaction done simple?
Well, that was the deal that I was just telling you with the SBA there, the 20%, right? So I had to put in another 10%
Understood.
Note myself, right?
Got it.
And I said, okay, I'll do that if you go to the original number that I was asking.
Okay.
Yeah.
Makes sense.
Which would have meant the note was kind of additional to the purchase price.
Got it.
That's pretty much what the math would have worked out. So
makes sense. Cool. And then closing happens, you pass the keys off, you have a similar but opposite situation from when you purchased the business. What's that Monday look like? The business is kind of off your books. What was the transition period like? Were you involved? How did it feel to sell your baby?
So, it was interesting. It was a Friday afternoon when we closed. It was the end of November, and we were with the bank, and it was, I don't know, 3 or 4 o'clock, 3:30, something like that, and the wire's going out, and he wants to go over there and get introduced, and I honestly told him, like, because it's just sort of a funny thing with my father's house. He passed away, and then
Sorry to hear.
yeah, and we went through this whole process of, we didn't get the wire. Like, we sold the house and we didn't get the wire until Monday. Like, we sold it on a Friday, and these people in there cleaning and all this stuff, and we didn't get the wire till Monday. So I was kind of heightened to get the wire, selling the business, right? And so they're sending out, well, it takes a while, right? And it does. I'm a banker too, so I understand that. But to take him over and introduce him to all the staff, and nobody knew that I was selling the business, right? None of my staff knew. Was a big thing to kind of do that without having the wire. So, the closing was in Doylestown, the business is in Westchester. All right, let's jump in the cars.
Getting there at 5 o'clock.
We'll go, but this wire's got to come before I take you into the building, right? So it did. It came, which was fine. So we went in. And of course, calling everybody into a staff meeting at like 4 o'clock on a Friday. Everybody's like, what's going on? Who is this guy? This new guy that's here. And it was honestly probably one of the most difficult things I ever did in my life, to tell everybody that I was selling the business. I did it for my family. It was important to my family to get this done and at the sort of numbers that we had. And it was a life-changing event to do this sale. But I had a very deep dedication to the people that were working for me, and I felt, terrible about doing it, but at the end of the day, you got to do what's right for your family. So, and I remember calling the 35-year guy. He was out on a job, installing something at 4 o'clock on a Friday, and I had to call him and tell him, and of course that was a big shock to him, too. That was the most difficult part, for me in terms of the sale process.
Completely understood.
Yeah. And then the transition, I was scheduled to be there for 1 month for free, and then another month, he'd pay me if he wanted me there longer. He felt like he was good to go after a week or so, and he went on to run the business from there. So
Gotcha. What was it like a month after? Like, when did it start to level out of okay, I'm not Mr. Elmark signing graphic anymore?
Well, so one of the things that, I guess your listeners should understand too, when you sell a business at the end of November and you're no longer employed, now you got to do something for December and January. Right? So I started, tearing wallpaper off my dining room walls and painting and redoing all that stuff. And, you can only do so much of that. And you watch, a TV show during the day or whatever. And so I had to get out of the house. And, I went and found a job by February, actually. I was back in the banking world and on my way again. But
did you think you were going to get another job that soon after?
I did not. No,
okay.
No.
Just nature calls.
It was pretty quick. Yeah, it was pretty quick. And, I'm not typically the type to kind of sit around and just sit and watch TV all day.
Sure.
I just had the itch to get back out and do something. So
yeah.
I was too young to retire at that time.
Yeah, understood.
Yeah, I was in my later 50s, but too early to get Medicare or anything like that.
Yeah.
So.
Did you ever have any thoughts about man, I might have sold too early, or looking back, do you think it was absolutely the right time?
So I did, honestly. Again, as I said, we record months every month that year, and you knew a recession was coming, right? The 2008 recession. Now we're in 2017. How long can this go, right? It'd been building,
cycles,
it just. It's coming. You just don't know when. And one of the things I didn't want to have happen was we could have survived. We had paid down a lot of our debt. Part of the magic of buying a company is really important is that, you can leverage it up but you got to pay that debt, right? And it's really important to pay that debt. And it drove my thought process throughout the 4.5 years I was the owner there because, there were times when it felt like it'd be nice to go down to 5 or 6 people, maybe, and just a core group of people.
Yep.
But that doesn't pay the bills. It doesn't pay the
sure.
debt, right?
Yep.
So you have to make it go with 10, and you got to try to get the numbers to keep growing and growing. But we did a great job with it. But it's important to understand that when you go through this, because it's part of the process, right? And and you need to keep growing it, and you need to feed the business, and you got to find ways to grow and to keep growing. And the fact that we could grow as much as we did without having to hire more than the 10 people was tremendous. Over that time frame to be that much efficient.
Yeah. Very cool. Well, any advice for people who are current business owners who are in the process of selling or thinking about selling? What kind of advice would you give them?
So I would tell them to, make sure their house is in order as they're going to market. Talk to guys like yourselves and understand what you need to go to market before they're ready to go to market, and get out and work with you, ahead of time, 6, 12 months ahead, and get their house in order. One of the things that came up with me was, tax returns. It's really easy to kind of say, hey, last week of December, put these checks, we'll deposit them January 1st, but when you come around to trying to get SBA financing for the next buyer, you're not going to get credit for that, right? So it may not be the right thing to do to save taxes in that fashion. But get your numbers together, have them strong, have the month by month so that somebody can see the trends if it's that kind of a business. We were a little bit seasonal. The winter months were a little slower, although towards the end, like every month was great. It didn't really matter when it was. We could crank things out anyway. So
because that SEO.
Yes, it was the SEO. Boom visibility. But and so get all that in order and make sure that you kind of know what you want out of the deal and you're in agreement with your business broker. The business broker is really important to the process. And I'm singing your praise. I've never worked with you individually, but, business brokers can be extremely important to the process. And they keep it on track, right? They're theoretically an independent third party between the buyer and the seller a lot of times, right? Until the lawyers get involved. So it's important to keep things going and solve whatever issues come up along the way. I will say this, one thing that came up with my sales deal was, in the purchase agreement that was, my sale agreement was that every employee was going to stay on and they were all going to keep their salaries, that they had. And I only found out like the day after I sold that that was only true up through the day that the person bought it. And then after that, it all changes. And the new owner has the ability to change whatever they want to change. So,
Gotcha.
And that was one of those things where, well, why do we even have it in there? Because if that's the case, so it's important to watch that stuff. If you, on the way out, if the owner doesn't want to buy your receivables, you got to make sure that you have a way to collect those, as well. You got to make sure that, there's some third party
not send the check
involved.
To Elmark.
Right. Yeah. That's because that was a little bit of a dispute with us as well. So, important to, to have good people working for you on the lawyer side, on the broker side. Just surround yourself with people that can help you in that process.
Do you use a special M&A attorney or was it?
I did. I used the guy that we had used in private equity with Bradley Ronan. He was a very good attorney. So he helped me through all these processes.
Make sure you have someone who specializes in the field, because a lot of times when you're working with people, it's like, oh, I got a lawyer, I got this guy, but you want someone who's specialized. 100%.
And on both sides, on the buy side and the sell side, you hit a really important point there, Steve, that you need an attorney that knows this stuff, because otherwise, and I've seen it even in deals that I'm not involved with, it just goes sideways, with an attorney that really doesn't understand that everything's the same in a sale purchase agreement, except for those 5 things that everybody has to agree on. And if you just need to fight your way through those 5 things, you should be able to do it. But if everybody on both sides, all these warranties and things that the seller has to put out and everything is the same, then you have a pretty good, transition. But having lawyers on both sides that understand M&A transactions is really important.
Makes sense. Cool. Well, I mean, that was an awesome story. I really appreciate all the details you shared. You had an awesome run with Elmark. I'm sure you're proud of it. Any last words?
No, I am proud of what we did there, the way we grew and what we did and a lot of the things that we employed there, new systems, incentive systems, the things that we did, like there was a lot, and it was great to be able to tell my story here a little bit, because it's all sort of bottled up in me for a long time. Quite honestly, I've thought about writing a book and things like that, and it made me jot some things down here that, were kind of fading from memory as I get a little bit older here. But it was a tremendous experience, and it can be, if you find the right thing that can work for you. Looking back at the things that we did and the fact that I learned how to do graphic design and, I learned how to run a CNC engraver machine, like unbelievable, So, no, it was very exciting, and I appreciate you having me in for this.
Hey, absolutely. I was happy to have you. Thank you again. My only request is that when you do write that book, you have to include this podcast in the foreword saying that this is what helped spark it. But yeah, no, thank you everyone for listening, and until next time. All right, that's it for today's episode, and thank you for tuning into the Business Sales and Acquisitions podcast brought to you by the Term Business Advisors. As you're listening to this show, if you can think about anybody who is either in the market to buy a business or considering a sale, feel free to share this episode with them if you think it will help. That's ultimately why we put this information together, to help give some insights on how the process really works. With that being said, we'll see you on the next one.